In the last couple of days, the market has been giving us quite a lot of opportunities to buy more shares of great companies at good prices. So let's talk about the 3 stocks that I've been buying in the meantime. Of course, these are just 3 stocks. As you've seen in the market, and especially tech companies have taken a quite big hit in the last couple of days. For example, if we look at the heat map, you can clearly see that tech companies have taken a bigger hit compared to financial companies or even healthcare companies. I mean, look at Nvidia in the last week, the stock is down 14.2% despite another excellent quarter by them. Meta is down 5.6%, Google Alphabet down 8.82%. So there are definitely a lot of discounts going around right now in the market. Of course, you will say, yeah, but these stocks were already overvalued, they're up a lot, etc., etc. We're in a bubble. I don't think we are in a bubble. I think most of these companies, if not all of these big tech companies, are very, very good companies that are still growing quite rapidly and extremely profitable. And so in this video, let's talk about the 3 stocks I've been picking up. If you enjoy this type of videos, hit all the buttons, like, subscribe, do all of that. We'll really appreciate that. And also a quick thanks to the new sponsor of the channel, FinChat. More on that in just a second. So company number 1 I want to touch on is, of course, Alphabet Google. Now, right now, believe it or not, Alphabet is trading at $168.5 per share. Year to date, the stock is now down 10%. It has a market cap of just over $2 trillion. Then if we look at the growth expectations, I mean, for revenue in the next 3 years, it's expected to grow 10.8%, for the next 5 years, 16.7%, in the next 10 years, 18.2%. Then if we look at the expected growth rates for revenue, for example, that's the compound annual growth rate, 3 years out, 10.8%, 5 years out, 16.7%, 10 years out, 18.2%. If we look at the diluted EPS, for the next 3 years, 12.8%, the next 5 years, 26.8%. So this is still an amazing company to own. Now, as you know, I've been using FinChat for quite a while in my videos more recently, but I'm proud to say that they've reached out and they wanted to sponsor the channel. So who am I to say no? Now, for those of you that don't know what FinChat is, it's basically a stock research platform that has complete financial data on all stocks globally. And the best part is basically this segment right here, segments and KPIs on each and every company. They're the only platform that tracks company-specific data points. So for example, if we look here at Alphabet Google, you can look at segments and KPIs. If you want to look at revenue per segment, so YouTube ads, for example, and let's pull it here, Google Cloud, you can see the compound annual growth rate since the December quarter of 2019. So YouTube ads has grown at a compound annual growth rate of 17.27% since then, and Google Cloud faster than that, 35.49%. And of course, you can do that with the other segments as well. You can look at revenue by geography, look at EBIT here, or other KPIs such as TAC, traffic acquisition cost, paid clicks change, etc., etc. And this is not just for Alphabet. We're going to use this for every company that we analyze. And this is something that I've been showing you for the last couple of months since I started to use FinChat, even before they offered to sponsor the channel. Oh, and by the way, all new users get 2 weeks for free of FinChat Pro. But if you really like it and you want to upgrade, you can use my code COUCH, which will be down in the description and in the pinned comment to get 15% off. And so continuing here, looking at the forward PE, EV to sales, EV to EBITDA, comparing it to their close to 10-year mean, we can see that it's well below, right? If we look at forward PE, stands at 18.75, which is quite crazy. Looking at forward EV to EBITDA at 11.54, the median here is 12.13, and then here the only one that's a bit above it is EV to sales at 5.12 compared to 4.82. The current average analyst price target sits 30% higher than the price we're at right now. Now, if we look at what's going to happen with free cash flow for a company, right? Because we know that CapEx is increasing quite a lot, but what about free cash flow? So first up, free cash flow for the last 12 months, well, for fiscal 24 was $72.76 billion. And that's expected to grow 5.3% in fiscal 25. But as you can see, accelerate quite a lot in fiscal 26 and fiscal 2027 to reach $112.52 billion in free cash flow by fiscal 27. Now, of course, a lot of the focus with Google is on the advertising side of the business, search, their monopoly, and whether or not LLMs, chatbots, and all of that is going to hurt that business. Fair enough. So far, the data doesn't show any cracks in that business. But there's another business here that is doing quite well, and that's of course Google Cloud. As you've seen, Google Cloud is growing quite quickly and becoming more and more profitable. Now, last quarter, this was, let's say, an issue. It only grew 30.1% year over year after growing 35% the quarter before that. But as you can see, it grew 35% over a very weak quarter, same quarter a year previously. So just like with Microsoft, this was an overreaction in my opinion. And just circling back to the Google Services operating income, I mean, where do you see the cracks here? I see operating income continue to increase quarter after quarter. And so with Google Alphabet, to me, it's a no-brainer at these prices, right? Still Google search, advertising, get YouTube, you get Google Cloud, you get these call options on Waymo, which by the way, they have reached 200,000 rides per week, which is a 20x increase in the last 2 years, which to be honest, is quite impressive. Plus you get DeepMind and everything else that Google is working on. So this number one here on the list. Moving on to stock number 2, and that's a semiconductor player. No, it's not Intel. Calm down. Although you know my thoughts on Intel. No, it's actually Micron. So believe it or not, Micron is back to $91 per share. It has a market cap of $102.3 billion. And I mean, with regards to Micron, if you look at the year-to-date performance, it was doing much better a couple of weeks ago, just like plenty of other stocks. But right now, it's still up around 4.6%. Now with Micron, they are still expected to grow quite rapidly. Of course, them being a more cyclical company, it's trickier. You better time your exit near the top and not when you are in a down cycle. But with Micron, with the HBM wave still in the early stages, I think we have a long time until we reach that top of the cycle. And so looking at some pricing metric, we can see that the forward PE sits close to 12 times, which again, for a company that is expected to grow rapidly, like Micron, it's really not that expensive. If we then look at EV to EBITDA, just over 6 and EV to sales just under 3. Yes, looking at the median here, it is quite close, but we are now entering a growth wave for the company. Looking at the average analyst price target, that sits 41% higher than the price we're at right now. And then looking at revenue and expected revenue growth, right? For the next quarter, or the upcoming quarter, which they'll report somewhere in March, revenue is expected to be $7.93 billion. The expected number was closer to $8.9 billion, but there are some headwinds, things that are out of their control. So that's going to be a quarter where they take a hit. But look at what happens afterwards. Afterwards, we're going to grow quite rapidly. And to be honest, if you look at the results of NVIDIA Blackwell shipments, I mean, that should be a very positive sign for a company like Micron. Looking at where Micron generates their revenue, well, 2 segments, DRAM and NAND. NAND is not growing as fast as DRAM, as you can see right here. DRAM is the red one, NAND is the turquoise one. Now, in those 2 segments, we have, of course, the compute and networking, which is growing the fastest here. And you can clearly see the cycles, right? The up cycle, then we went into a down cycle, but now we're fully on our way up. And I don't think we're anywhere near the top just yet. So HBM pushing this much higher. You then have mobile, storage, and embedded. Now, more recently, there was a conference and they told us the following. They now see fiscal third quarter gross margins to be lower by a few hundred basis points sequentially. This is primarily due to a higher mix of consumer-related or consumer-oriented mix in fiscal Q3, lower calendar Q1 consumer-oriented pricing, and overall or broader NAND industry conditions. As a reminder, our underutilization in NAND will weigh on fiscal third quarter margins as well. So when this was announced, the stock got hit, but then a couple of days later, the stock went up closer to $100. Of course, now with the macro, we are back closer to $90. Now, an analyst here said the following. Micron stated its May quarter gross margin should decline by a few hundred basis points sequentially below our estimates of a slight increase. As a result, they are lowering their Q3 gross margin expectations from 40% to 35%. Micron stated that the lower margin outlook was driven by consumer DRAM mix, as well as NAND underutilization charges and NAND pricing weakness. While the lower guidance is disappointing, we are still optimistic on Micron given their AI HBM opportunity and our belief that the DRAM market will recover during the spring. So again, short-term hits, and I do think that a lot of it is already baked in to the stock price. Now, a small reminder here, management told us the following: we have the best product portfolio in the business and we're operating very well, very efficiently. The combination of those things puts us in a tremendous position as the market conditions improve later this year and as the industry grows over the next several years. We did put some markers on, for example, the size of HBM and going from $16 billion total addressable market last year to over $100 billion by 2030. Those are big new markets, and then you've got a number of associated other product lines that will grow sort of in that manner as well. So, like I said, we have cycles with these types of businesses in the memory segment, but I think the upcycle is just going to go on for a much longer period than previously expected. And here we're only talking about HBM, and like they say here, they've got a number of associated product lines that will grow sort of in the same manner as well. Don't underestimate Micron. Now, of course, with a name like Micron, it might not be as popular as an NVIDIA or a TSM or a Broadcom or something like that. Yeah, it's true that the stock didn't really move much for quite a while, but this is just a stock that's begging to go up, right? Once we get through those headwinds that they've been talking about, I think this thing will just go into triple digits and much, much higher because, well, the business is going to be doing much, much better and more profitable in the future. So, yeah, you do need some patience here, but then again, you do need some patience with a lot of other stocks as well, which is why we're going to talk about, of course, the absolute money destroyer, the advanced money destroyer, always money down, AMD. Yes, AMD. AMD is down under $100 at the moment. To be more specific, $99.51, has a market cap of $161.25 billion. Which means that year to date, we are now down 17.4%. Year on year, the stock is down even more than that, 43.6%. Now, of course, you know, I've been building up my position in AMD. And like I said, yeah, I'm not here to time the market. But if it goes lower and lower, I will just be allowed to buy more shares of a great company at a cheaper price. I liked it at 105, I liked it at 110, and now I love it even more under $100. You might call me crazy, but I mean, when I see a good deal, I just have to buy it, and AMD sits on that list of very good deals at the moment. Right now, if you look at some pricing metrics, EV to EBITDA of 20.1 times, much lower than the 5-year mean here. Forward PE about the same, also much lower than the 5-year median here. And then looking at EV to sales, under 5, which is also a little bit under the 5-year median here. So, I mean, today AMD is a much stronger company than before and trading at a lower premium than before. So, yeah, no brainer to me. The current average analyst price target sits 49% higher than the price we're at right now. And then if you look at what the market is expecting this business to do, first of all, revenue-wise, we're going to grow quite rapidly in the coming fiscal years. But then if you look at free cash flow is expected to explode in the next coming fiscal years. We've seen NVIDIA, right? NVIDIA in fiscal 27, it's expected to generate well over $100 billion more free cash flow than AMD. But AMD is going to go from $2.4 billion from last fiscal year 24 to over $11.3 billion in fiscal 2027. So super rapid growth. We of course know where that growth is going to come from, that coming from a data center. But don't forget, it also has the client side of things. It has the gaming side of things and embedded. We know that gaming and embedded, as you can see right here, again, all powered by FinChat, we can see that those have been headwinds for the company. We've heard the management say that, okay, those headwinds will turn into tailwinds in the second half or towards the second half of the year. So although everybody's been focusing on this segment right here, which is data center, and by the way, the client segment has been doing very well as well. Server business has been doing well. We almost forgot that there are other segments of the business that will push the overall revenue and over profitability profile of this company up in the coming quarters. Of course, the more people ignore that, the better prices and the more shares we can have. If you forgot what was mentioned in the last earnings call, this is a quick reminder. Software investments will continue this year. MI325X volume production ramp is progressing well. MI350 is looking strong, huge increase in AI compute performance, and this will launch in the middle of the year instead of in the back half of the year, which is of course very bullish. MI400 is progressing well as well. 2026 launch is on track, and there's a lot of interest for training and inference. We know that we've heard NVIDIA talk about Blackwell being, well, basically architecture for inference. So AMD definitely doing the right thing on focusing on inference as well from the start. Client segment will grow ahead of the market. As for the data center side of things, again, we did not get the AI revenue guidance that we wanted. Basically, we didn't get anything for this year, but they did say that it's going to be over tens of billions of dollars in the coming years for AI revenue. They expect strong double-digit growth, more in the second half of the year than in the first half. Server did much better than the data center side of things, and the GPU exit rate for 2025 will be much stronger than in 2024. And of course, with AMD, especially if you bought at $200 or so, it has not been a great journey, right? It's basically cut in half since. But if you've been buying more recently at 105, 110, because those are more reasonable prices, it should have never been at $200 to start with. Let's be honest. Back then, like I said in previous videos, back then this was the next NVIDIA, now it's the next Intel. And when I hear these things, this is why I started to open a position in AMD. I started to see negative sentiment towards it. The hype is coming down. The business is actually doing much better. And so I'm like, okay, you know what? There is now a disconnect here. I don't know where the bottom is going to be, but I might start to accumulate more shares. And that's exactly what I've been doing in the last couple of weeks. So these are the three stocks high on my buy list right now: Alphabet, Micron, AMD. Yes, the likes of PayPal, the likes of SoFi, and now maybe even dLocal and Rocket Lab as well after yesterday's earnings crash might also come on that buy list in the next couple of days, for sure. What did you buy in the last couple of days? Let me know down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.